Hey everybody, how are you doing? It's Sean from Ridesharing101.com. And hey, if you like the videos, please subscribe to the channel. Please join the Facebook group, Ridesharing101, all one word. And today on the vlog, I want to talk to you guys about insurance. James River Insurance, the company that insures Uber, is going to stop doing that as of the end of the year. They've made an announcement that basically the partnership with Uber hasn't turned out to be as profitable as they thought. Therefore, at the end of the year, they're terminating their relationship and they are dropping their coverage for Uber. And basically, this means that Uber is going to have to find another insurance carrier. So basically, you know how it is today. If you get into an accident that's not your fault and you have the proper insurance on your end, James River Insurance would kick in and pay for damages to your car. So if you're at a red light, somebody rear ends you while you have passengers in the car, or somebody T-bones you, runs a stop sign, if you have the proper insurance coverage, James River would be the primary insurance company and cover damages to your car, damages for your passengers, damages to you, etc., etc. They are no longer going to do that. And why you should be concerned about this is because Uber has approximately 2.5 months to find another insurance carrier to pick up the slack. And part of the reason that James River said they're canceling the relationship is, one, because it's not as profitable, but two, it went into as profitable as they thought it was going to be, or as they like. And then, you know, there's some talk about how a lot of the auto industry, insurance companies, basically their profits are down for the year. So there's not too many insurance companies that can step up and fill in the gap. It's not, you know, we're not talking about your regular auto insurance carriers like State Farm or Farmers. These are bigger companies, conglomerates. And if James River, who was Uber's carrier for sneeze, excuse me. It's live here, I don't edit anything. Or not live, I should say, I just do everything in one take. But if James River couldn't make this work in 7 years, it's not going to be too enticing for another company to come in, because there's already one company with a history and a fairly large company that couldn't make it work. So companies might be a little leery. They also might charge Uber more premiums than James River because they've got, you know, some history. They know this other company couldn't make it. So if they're going to have to take on more risk, they're going to charge Uber more, which can either mean a couple of things. Either Uber raises their prices, which they should do anyway, or they lower the amount that they pay drivers. And if they raise their prices, they're not going to pass that along to the drivers. I don't think. I mean, they've already showed they don't really care about us drivers. So, keep that in mind, okay? They might think that if they raise their prices, they might lose market share. So what's the alternative? To screw the drivers some more. Just something to think about. I'm not saying they'll do that. They could raise prices and they could eat the profit, although I doubt they'll do that because, you know, they're already getting a lot of scrutiny for losing so much per quarter and per year over year. So they could raise prices and not pass it along. Okay, not the best of things. However, the other thing to note too is that they could raise the rates to Uber in addition to not providing as much coverage. Now, Uber has a $500 deductible if you get into an accident, but I think the deductible for Lyft, and this is whether or not it's your fault or not, I think isn't it with Lyft? Isn't it something insane? I don't drive for Lyft. I do have friends that do, but I think, isn't it something insane like $1,500 or $2,000? Well, what if this new insurance company says, okay, we're raising your rates, Uber, and you know what? We're going to raise the deductible too, so we need it to be $1,000. That is going to affect a lot of drivers. You guys, gals, need to be prepared for this. Now, some insurance companies that do offer rideshare insurance, I know, will lower the deductible that you have to pay. So for it, in Lyft's case, if you drive for Lyft with rideshare insurance company, if you drive for Lyft and you have the right rideshare insurance, even though the deductible is whatever, $1,500 or $2,000, they'll say, hey, we're going to only make you pay the same that we make you pay the Uber deductible, $500. So that's a good bonus if you have that company, and I'm not sure which one it is. I think there might be a couple that do that. You need to ask. It's something that you might be able to negotiate. But you also, I think, going forward, are really going to need to shop for the right rideshare insurance. You're going to want to make sure that you have rideshare insurance that will lower the deductible, that might want to think about getting what they call gap insurance. A lot of cars will lose 30% of their value as soon as you drive off the lot. So your $20,000 car is now worth $14,000 just because it now has a mile on it, and you're a first-time owner. So there is insurance that you can get where if you get into an accident and your car is totaled, they will pay for a new car. In other words, this car that was $20,000, instead of, and if you get into an accident, that's not your fault. Most companies are only going to give you $14,000, or whatever the depreciation is. Whereas with some insurance, you pay a little bit more for it. You get the full value. You get the full $20,000, and you can go out and buy a new car to replace it. Because it seems kind of silly that you drive off the lot, get into an accident that's not your fault, but yet you can't go and buy the same car even though your car might only have 5 miles on it. Seems silly, but that's one of the ways the insurance companies get you. So you might be a good time to renegotiate your insurance, or maybe shop around and see what you can get, and try to find an insurance company that will maintain a low deductible regardless of which rideshare company that you have, and that will pay for the value of a new car instead of giving you the value of a depreciated car. So just something to think about. James River Insurance is kind of a big deal right now. Everything's good because you have insurance for another 2.5 months, but nobody knows who this new insurance company is going to be. Nobody knows what changes they're going to make. Nobody knows what their rates to Uber are going to be and how Uber is going to handle that. They might say, well, maybe they start charging drivers an extra fee. They shouldn't. That would be stupid, but Uber does a lot of things that I don't agree with, which maybe explains why they're not making money, or why they're not making a profit, I should say. They do generate income. They do make money. They just don't make a profit. So something to think about, everybody. Thanks for watching. Make sure you get the right insurance, and I'll see you next video.